the Clarity Act is moving into a new phase after clearing a key hurdle in the Senate Banking Committee. On May 14, the committee voted 15-9 to advance the Digital Asset Market Clarity Act, also known as the Clarity Act, setting the stage for a potential full Senate vote. This development marks a major step forward in the effort to establish a clear regulatory framework for digital assets in the United States. The Clarity Act aims to provide a system of regulation for the offer and sale of digital commodities, with the Securities and Exchange Commission, SEC, and the Commodity Futures Trading Commission, CFTC. Sharing jurisdiction. The bill draws a clear boundary between the two agencies' roles and would permanently classify Bitcoin and Ethereum as non-securities, a move that could have significant implications for the market. The vote in the Senate Banking Committee was largely along party lines, with two Democrats, Ruben Gallego and Angela Alsobrooks, joining all Republicans in supporting the bill. This bipartisan support is a positive sign for the bill's future, but it is not yet law. What comes next is a critical step in the process. The Clarity Act must now be merged with a separate version from the Senate Agriculture Committee before it. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Can be considered by the full Senate. This merger process is expected to be complex, as the two versions of the bill may contain differing provisions. Once a unified bill is finalized, it will need the support of at least 60 senators to move forward. Majority Leader John Thune will need to bring a motion to proceed, which requires 60 votes. This means at least 7 Democrats will need to support advancing the bill. The current momentum suggests that the Clarity Act is gaining traction, but the path to enactment remains uncertain. The bill's success will depend on the willingness of both parties to compromise and find common ground. The Clarity Act's potential to provide regulatory clarity for digital assets is a major factor in its importance. The current regulatory environment for digital assets in the U.S. is fragmented, with the SEC and CFTC often operating in overlapping jurisdictions. This lack of clarity has created uncertainty for market participants and regulators alike. The Clarity Act seeks to address this by establishing a clear division of responsibilities between the two agencies. If passed, the bill could have a significant impact on the digital asset market, particularly for Bitcoin and Ethereum. By classifying them as non-securities, the bill would remove a major regulatory ambiguity that has hindered market growth. This could lead to increased institutional adoption and greater market stability. However, the bill's success is not guaranteed. The merger process with the Senate Agriculture Committee's version could introduce new challenges, and the full Senate vote will require broad support. The outcome will depend on the political climate and the willingness of lawmakers to prioritize regulatory clarity. The Clarity Act's progress has already caught the attention of market analysts and industry participants. Alex Thorne, head of firm-wide research at Galaxy Digital, has raised his estimate of the Clarity Act becoming law in 2026 to 75%. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Citing the Senate Banking Committee's bipartisan vote as a key breakthrough. This increased confidence suggests that the bill has a strong chance of passing, but it is still a speculative assessment. The next signal to watch is the outcome of the merger process and the full Senate vote. If the Clarity Act is able to pass both the merger and the full Senate vote, it could represent a major milestone in the development of the digital asset market in the United States. The next few months will be critical in determining the bill's fate and the future of digital asset regulation in the country.